Hi everyone, this is Vinod here. In today's video, we'll be looking at some of the stocks that I am looking at for my discretionary part of my portfolio. So I am a momentum based trader and I have two components to my portfolio. One is the core part, which is completely systematic, which is rules based part of the portfolio, and the other is a discretionary portfolio where I trade based on momentum as well, but I look for patterns as well as any setups, primarily using momentum as the primary factor for scanning and filtering down the stocks. So let's look at some of these ones for next week. Before we look at this week's, let's look at some of the last week was a brilliant week. Some of the names that was shared were Palantir, which is continuing to rise up. Like I have shared here, this was shared when the initial breakout at 44 happened. Same with Robinhood, the breakout at 44 levels was shared, and after the earnings there was a huge gap up. Similar story with Cloudflare Net as well. It is right now in stage 2, so it will present a lot of opportunities to enter again. So that's what I said, when a stock is in stage 2, there will be multiple opportunities to enter. You don't have to exactly enter at the breakout point here. You can watch out for continuation patterns where it pulls back to its 21-day EMA or 50-day EMA for entry. Similarly, AFRM was also shared last week. It has had a great move after the earnings report. Spotify as well has been hitting new highs. Docs as well had a pretty nice week after the earnings week. This should also definitely be in your watch list. And AFRM, there was a lot of noise from shorts last week before the earnings, and it did surprise to the upside as well. So when I posted here, it was around 375. I think now it's crossed around 500 levels. AFRM, it's one of the it's the number one ranked stock on the NASDAQ 100 index. It was recently included into the NASDAQ 100 after a brilliant performance in the Russell 1000 index. And this is similar to Palantir. Like after continues to keep moving up, continues to push higher, and the momentum is really strong, as you can see from the charts. Dave was another one that was consolidating on a weekly time frame, and it has given a breakout. This should also definitely be in your watch list. And the cybersecurity ones have also been doing well. These were all and coming back to some of the AI stocks, this one hit my stop loss. The pattern failed because there was a news that Nvidia had sold out all their positions in SoundHound AI. So I took a stop loss. This was a very small these are like a very small percentage stop loss. It is in order to be successful in trading, you need to have a very small ego. Like a lot of the people who have professionals who have said, if you need to accept or listen to the market, and when your pattern is broken or when your stop loss is hit, you need to take it. This is a game where you'll have many stop losses getting hit, so that you can limit your losses, whereas when you are getting a winner, you'll have to ride the maximum to make it a big winner. So this is a game of few big winners and many small losses, like I always say. Tempus AI, this has been continuing to push higher. This is also it is now broken out of this particular base pattern, and it has earnings in a few days, I think. The last week, the lessons that I shared was that less is more in trading. Like it is all about making optimal decisions and faster decisions. If you keep adding more and more indicators or more and more factors for your decision making, you will be entering into an analysis paralysis, and you will be making very suboptimal decisions. Now let's come back to this week's video. Before we get started, the standard disclaimer: the stocks mentioned are only for educational purposes only. It's not financial advice, and you need to consult with your own financial advisor before you make any trading decisions. Now for the update, S&P 500 is well above the 21-day exponential moving average, and it's also close to its all-time high. and the NASDAQ as well. Almost all the indices are like close to their all-time highs. They are poised for a breakout, and this is very evident, like the way the market ignored the negative news around the inflation data clearly shows that the bull market is still strong and the bulls want to take the market even higher. Now when we look at it, the Deepseek crash and the tariff news crash, the 2 Mondays where we had a huge volatile days in the market, now look like brilliant opportunities in hindsight. Now when there is a lot of volatility in the market, having systematic rules like that define when you will stay invested, when you will add to your positions, and when you will move to cash is very very important, because without these predefined or systematic rules, you will be reacting based on your emotions, because when money is involved, our system one takes over and we will be making decisions based on either fear of greed, fear of failure, or you'll be primarily be taking decisions driven by your emotions, which always leads to suboptimal decisions, and they don't help your portfolio. Then that is the reason why you need to have a systematic rules. And like I said, this week both the indices are primed for a breakout into, like, if there is no selling pressure coming in. This is just my opinion and I could be wrong, and we are already seeing that the European markets have opened like in a positive territory. I think the good news around there could be the Ukraine-Russia war could be coming to an end or something like that, and that's the reason why I think it will create more certainty in the market, and which will give more confidence to the investors. And in my systematic portfolio, there are no changes. App, Lovin, and Palantir are the top 2 ranks, and these have been pushing my portfolio higher. I am also coaching few people on how to design their own momentum based systems, so that based on this, so that they can, I am trying to put together the building blocks so that they can design their own strategy that fits their own trading style and investing style and their own personality. So choosing a style that fits your personality is very very important, because only then you will be able to follow that system for a long period of time. This is what will be covered in my one-on-one coaching. So we'll be going into why you need a systematic approach, why do we use momentum, why do we choose momentum over other factors like value, growth, index, and we'll also break down investing decisions, and this is the core part of the strategy, like how do you put together a momentum system. And I'll also be sharing from various, like from my experience of reading a lot of academic papers on momentum and how do you improve these momentum returns. And I'll also be sharing some bonuses around like the do's and don'ts when it comes to momentum system. Like I said, this week my focus will be on breakout stocks rather than pullback stocks, because the market wants to push higher, like I said earlier, the indices are close to their all-time highs, and so the momentum in the breakout stocks will be more higher. But if there are some good setups with good risk rewards, then I will definitely be taking them. I took one on Friday. Sophie looked very interesting from a risk reward perspective, so I took a trade in Sophie. I took a loss in Sound, and I drastically reduced my position in Freshworks. But I still have a minor position, because this is the second time I have tried to enter in Freshworks, and it hasn't moved really much after the earnings report. Tempus AI and Who did really well in my discretionary part of my portfolio. And these are some of the stocks that I'll be looking at next week. Confluent is coming out on a daily time frame. It gave a breakout with nice volume. It is retesting it. It is a very textbook setup. A lot of cloud stocks, a lot of data companies like Confluent are moving, or in general the tech and growth stocks are breaking out from their large bases and are trying to get into stage 2. And AFRM, this had another positive, like I shared this last week as well, and the breakout at 50 was also shared. Now it's pushing at 80. It's showing some strong momentum, and that is AFRM. CART is another breakout candidate. It's right below the base and it's trying to break out. It has earnings in a few days, so you need to be careful as well. I'll be definitely be watching how CART moves. Yeah, and Dynatrace is another tech company that is coming out of a very large base. Like you can see, it's from when you zoom out, it looks like a volume contraction pattern. Like you can see, it's making a higher high and higher lows, and it's trying to break out of this base. It has already tried a couple of times, and it's now trying to try again to come out of this base. Yeah, it looks like a nice textbook chart pattern. Yeah, Dutch Bros is another one that was shared earlier at around 50 price levels on this channel. After the earnings, there was a huge gap up, like 30% rise on one particular day, and it's also coming out of a very large IPO base kind of one. So definitely one that should be there in your watch list. You can look out for. If you're a really conservative and you don't want to risk too much because of its huge gap up, you can look for continuation pattern or pull back to its moving averages before you enter. Yeah, that's what I would do. None of this is financial advice. You need to make your own decisions. And yeah, DraftKings is another one trying to break out of its large base. Yeah, just very similar to the other cloud and techs and growth stocks in general. Duolingo has also been one of the strongest momentum stocks as well. It has been pushing higher. It consolidated for a few weeks, and now it gave a breakout. It retested, and then it is moving out again. As you can see, like the moving averages are converging, the 21-day and 50-day, and then it moves again. Like you can see this in very lot of momentum stocks. When they rise up a lot, then they take a breather and then continue to push even higher. Yeah, like these are like these kind of regions are best for like conservative investors who want to minimize their risk reward in their trade. IBKR Interactive Brokers has also been one of the strongest trending stocks, and there's good volumes as well. It moved up a lot and then consolidated for a few weeks, and then now it's continuing to push higher. Yeah, the next set of companies like Netflix, Meta, and Dash, these two are still part of my systematic momentum portfolio that trades the NASDAQ 100 index. Dash was part of it, and only after Palantir and AppLovin's inclusion, this was pushed down the ranks. But it's still doing very well. I included this section mainly to show that even by investing or by trading large cap stocks, you can make a lot of money. Like Netflix has been a bagger, like close to 92% return for me. Meta as well has been rising up. Yeah, because when I initially started investing or trading, I used to think I need to invest in very small caps sometimes, or like mid cap companies to make a lot of money. But it's not. It's a myth. Like you can make a lot of money by investing even in big companies like Netflix, Meta. Yeah, Dash. Meta has also been. Facebook has been. Yeah, has been moving up continuously in the last couple of weeks. Don't know what's the reason, but yeah, we don't need to find out why something is moving. As long as we don't need to waste our time and resources in finding out why something is moving. As long as it is showing price momentum, it continues to stay in your portfolio. And if the momentum is waning out, you can quantify it and then remove it from your portfolio. Dash is another one that has been pushing higher, and after the earnings, it has been on a rip. As CrowdStrike is another one that was shared earlier on this channel. I made a video when I exited from this fall, and when I re-entered this as well. Like I had mentioned, when I re-enter, when it formed an ascending triangle pattern, I re-enter. Yeah. CrowdStrike has also been pushing higher after this breakout. It's in all-time high territories. It's a little bit overstretched right now because it's very far away from its 21-day and 50-day moving averages. Yeah, and yeah, the whole cybersecurity space like FTNT, CrowdStrike, they are all been doing well in terms of price momentum and scaling new highs. Atlassian team, it did breakout or move a lot after the earnings. It looks like it wants to retouch the gap, and then we can look for an entry there, or yeah, we can look for a bounce if it is trying to bounce from that gap. Yeah, it is also in one of the team is also rising up the ranks among the NASDAQ 100 stocks because of this huge run from 145 levels to 313. Yeah, so that's why its price momentum is very good, as you can see from here. Yeah, that's Atlassian. Next one is Genpact. It's pretty volatile stock. We don't have to take every breakout that happens. You can look for some kind of move further up, and you can look for continuation patterns. Yeah, like I have found that sometimes when I trade, continuation patterns gives me better here win rate or hit rate rather than when I take some breakouts, because sometimes the breakouts go up and then come back. Yeah, it also depends upon the names that you're going to trade. This one is a pretty volatile one, so I would wait for a continuation pattern, but if you are a very aggressive trader, you might be interested in taking this breakout as well. Yeah, another company that's Mattel that is trying to get into stage 2. It's forming it's coming out of a very large base, lasting for a couple of years. Yeah, Airbnb is another one that had a huge gap up after the earnings. Yeah, I would only look at it after it takes out this price level 170 levels. Only then I'll start looking, because it looks very volatile, and if you zoom out, you can see that the price has been moving in a very sideways trend. In spite of this earnings gap up, it's still in the sideways movement territory. Yeah. This has shown some significant strength. Once it moved below its 200-day moving average, it has bounced back again. Yeah, I'll be looking for some kind of a pattern as well to, yeah, and it has its earnings as well, so be careful. Next, PPC is also has been showing some good momentum. It did rise up a lot, and then it has consolidated for a few months, and then now it's trying to push even higher. That's PPC. And Amer Sports is another one that is setting up beautifully. Like, it had a huge run up, but it's now pulling back to its 50-day EMA. So this kind of setups, like I have marked in the chart, it presents an opportunity for like conservative investors or conservative traders. Like, it presents a good risk reward in terms of, it presents a good risk reward entry here. Day was also shared last week. It has broken out, retested, and it's trying to push even higher. HWM is another one that's been moving up steadily. It's pulling back to its 50-day moving average and then continuing to push higher, as you can see from these 4 instances here. Yeah, it's right now a little bit far away from its moving averages. Yeah, like I mentioned in the previous setups, if you are conservative and you want to minimize your risk, then you can wait for it to pull back. Yeah. Alibaba is another stock that is trying to move into stage 2. It's been back in news because of this AI trend, because of the models that it's been releasing. And it has been very volatile in the recent past, so I won't be taking this breakout. Instead, what I'll be looking for is, once it tries to push higher, I'll look for some kind of a flag or a continuation pattern, like ascending triangle or something. For me, only then it'll give me more confidence, because it's a pretty volatile one. But we need to also look at other things like volume profile and other things. But from it looks like a very textbook chart, like a base breakout. You can have even a tight stop loss if these kind of setups normally I would take these kind of setups day in and day out, but because it's been very volatile in the recent past, is why I would wait and watch, or I would have a very small position or a testing position just to watch how this behaves. Now for this week's lesson, this is one of the things that I would piece of advice that I would give to anyone who is a beginner. Like, first, try to be systematic first, and then move on to a discretionary trading, because once you know how system works, once you know how profits are made, the systematic approach teaches you how profits are made. Because in systematic, you will realize that even though your hit rate, even though your accuracy is less than 50%, you can still make a lot of money, because what matters truly is how big is your winner and how small is your losses. So systematic approach teaches you to take your stop losses, teaches you to ride your winners with by following systematic rules. Yeah, like I said earlier as well, investing is all about having few big winners and many small losses. Yeah, like I said, after systematic, you will definitely become a better discretionary trader. You will accept your stop loss without hesitation. You will let your winners run to maximize your gain. And early profit booking is a very bad habit. Like selling your winners very early is a very bad habit, which I used to do when I was a beginner as well, but only when I followed a systematic approach, when I realized making your decisions based on objective rules and not making decisions based on your emotions actually lets you to ride your winners. So early profit booking is a very bad habit. Similarly, letting your loss be turned into a bigger loss is also yeah. And if you want to join my community, you can join me on Patreon. I'll also post on Twitter, and I make videos like this on YouTube as well. Yeah, and thank you for watching.